This conference will now be recorded.
Good evening, ladies and gentlemen. This is Real Estate Trading Frank on a very summer, spring-like evening. I mean, what a day today. It was 77 degrees at one point. I mean, that's what you call the freak of nature. But hey, no complaints. A lot of stuff to take care of. The family side, so I was pretty busy. But anyway, welcome. This is a Clueless Trading weekend strategic webinars for newer members. I do webinars on Wednesday evenings and Sundays, and if the market gets pretty volatile, I certainly push in another webinar during the week so people are well informed about what's going on. However, the real-time Twitter feed is always there. Anything you need to know, what I'm thinking, what I'm expecting is all there. So that's a live stream of market conditions and forecasts. Saying all that, it is Sunday, 8:07 p.m. on January 12th, 2020. Welcome. Full disclosure, this is purely for financial education, not for any solicitation or advice. This session will be recorded, uploaded to the Google YouTube channel for viewing by all other members, free trial subscribers, and anyone out there with the internet connection. I certainly would like all of you to spread the word out that even if they're contemplating or even thinking of being a member of Clueless Trading, which will be hugely beneficial to them, in my humble opinion, they can always listen to my strategic forecast videos that are available for free on the Google YouTube channel. So please, definitely word to mouth is very important here in our on our service. We don't do high-paid marketing. We don't put out splashy headlines about 1,000% type of options gainers, which we have certainly had a few times. We're not looking to make, this is not a get-rich-quick scheme. It's consistent profits, which obviously has a large impact on people's net worth, depending on what they do. So saying all that, another important reminder, follow us on Instagram at clueless8_trading. I put up options charts there almost every evening, and you get a chance to see the actual visual picture of some of the trades that we have done, and it's exciting, and it should motivate you to be involved more and see how much money you could make. I don't have during the day. I do not have the physical time to squeeze in actual options charts. I certainly have deliver enough stock charts as well as market charts, but options charts you can track options through charts too. But that's available on the Instagram channel. Certainly follow us. If you don't have an Instagram stream, then certainly just create one and just hit follow. We need more followers. The word gets around, and it's all fantastic. On that note, welcome. So a pretty uneventful weekend this weekend, and there was no major, groundbreaking news. There was some news about a couple of rocket attacks on U.S. bases in Iraq, but that's kind of expected. You have a lot of militias, which are proxies of Iran, which at this point the Iranians are not going to directly attack us in any way or form, but their proxies, the militias, and that standard procedure will lob a couple of rockets and stuff like that. So that's expected. As long as none of our boys are have any fatalities, we should be good to go. So saying all that, we are going to get into the technicals in a few minutes. And before I do that, I just set up one other chart and it disappeared. No, it didn't. Okay. These are the ones that we're going to be looking at this evening, and I'm going to briefly go through them as we move along. The other thing is we have earnings seasons kicking off in full blast this coming week, with the JP Morgans and all those companies. Bear with me one second. One of my dogs is sitting on my foot. Hey, Romeo. So I just asked him to politely move a little bit. All right. So we have Bank of America. We have Goldman Sachs. We have one of my favorite companies, United Health. We have Delta Airlines, JP Morgan kicking off on Tuesday morning. So it's starting. All right. It's starting. So this is the fourth quarter earnings, fourth quarter of 2019 that are going to get delivered. It'll give us a glimpse on what the guidance is and whether or not the market can grow earnings can grow into what the market valuations right now, which are pretty stretched overall. Just so you guys understand that. All right. So there will be some this is options expiration week. Like to remind everyone, monthly options expiration, generally speaking, it is a bullish week overall. However, you do get a 24 to 48 hour period where you get a big thump in the market before they run it up into Thursday. Just generally what happens. Okay, it's a lot of technical factors that involve in the money management side that allow, that money managers basically square off on monthly options expiration. And then you get a move up into Friday, and then they let it go. So Friday would, it kind of eases back. So if you have options running into monthly options that we have running into January 17th, you need to be very vigilant, and you need to take down profits. And if there's swing trades, you certainly want to, as I did multiple times, if you see my Twitter feed on Friday, on the swing trades, move it out into January 24th, I wouldn't go with January 31st. I go with January 24th. You can go into February 14th. Remember, it's Valentine's Day, and the markets never crash before Valentine's or the day before Valentine's. I'm telling you that right now. This is one thing a lot of you new members don't understand, but there is an economic impact if we have a major sell-off in the market prior to major national holidays. Okay. The only time we had one of those was literally was a outlier, and a major black swan event was December 24th, 2018, when the markets closed down 600 or some 30 points or so, what we call the Christmas Eve massacre. All right. Since then, the market has not looked back. Right. Exactly. So saying all that, monthly options expiration generally from a technical standpoint is a unwrapping of a lot of bearish bets, bullish hedges also being taken down, and profits as the market surges. So we have a little bit more room to go move. But I'd like to warn everybody, because we are tactical traders after all. We're not idiotic, BTFD, buy the effing dip type of stupid emotional traders. We have to respect the fact that we are quite overstretched at this point. All right. And I'm going to explain that, and you guys have to manage it accordingly. If you're into fast moving stocks, well, you better be watching the screens real quick and taking profits down real fast, because things will change quite dramatically. Friday, the prime example, you took some nice profits down, markets ended down 133 points. On what? On nothing, other than the fact that we hit some major technical overbought levels. And of course, the media will always be looking around to find excuses. Well, I don't grow my net worth through, as a professional trader, listening to what the pundits have to say, who have been dead wrong most of the time on CNBC, Fox News, Financial Network, and Bloomberg. What we do is we respect the charts and the structures that we draw on it, and that is exactly what my strength lies. We are not going to be right every 15 minutes, every hour, or maybe on a certain day, but we are generally right 70 to 80% of the time, and that's a very high ratio, guys. All right. On Clueless 8 tactical forecasts, and the history of that is laid out bare on my real-time Twitter feed, as well as on the Google YouTube channel. So anyone says, hey, what were you doing on December 24th, 2018, when the markets closed down 630 points? Please go review the video around that time. Okay, we were somewhat moderately, small to moderate net long. And what happened? Does anyone remember what happened on December 26th? Let's see how good. I mean, I'm not testing anybody, but just curious. What happened on December 26th? Of course, you can cheat and quickly look at the charts. But what happened on December 26th, the day after Christmas, after we had that massive massacre, and everybody out there, every single major institution, analyst, whatever, that this is it. This is, even we know technically we're broken down. I even showed what the lower end of the cycle could be, but we also were net long based on short-term positioning. The fact that we were so extremely oversold on major indicators on the internal side. So what happened on December 26th? No answers?
It was one of the best days in history on the market.
Thank you, Paul. Exactly. We went up almost 1,000 points. Okay, so welcome to the stock market, guys. Just when you think it's all over, it ain't over. Just when you think it's too good, just the way it was on January 2018, when, if you listen to my video, I said this is phase 5. This is where the mom and pop are super excited. And then come February, and we dropped close to 4,000 points within a matter of 2 weeks. And it's coming. It's coming. Those type of washouts, maybe not that extreme, are extremely important for technical resets, picking up bargains, and moving along. As long as the long-term monthly picture of the stock markets are not buckling, you are okay to buy those large dips. But you have to be careful. You have to be careful, and trade management comes into play. So thank you for that answer, Paul. Just so you know, I'll just remind you all that you guys need to focus a little bit more. All right? So saying all that, because those are monumental, epic moves on the market. There's not many days in the market that we actually, I think we have had 2 or 3 in the past 2 years or so, 1,000 point moves on the Dow. And we have had 600, 800, 1,300 point drops on the Dow too. So like I said, bring it on, you know, we're ready. If you survive a hand-to-hand combat in the most vicious battle zones in the world, it's the same analogy in the stock market, then, and you come out alive, then you know what to do. Might not be pleasant, but you will survive and make a ton of money. So that's why we call ourselves, and we prove repeatedly, day after day, that we are tactical warriors, tactical traders, not emotional freaks. Very hard, very hard. It's not easy. Emotions are wired into our brain, our amygdala, our cerebral cortexes, right? And so it's not like something you just say, oh yeah, I'm just gonna be very happy because the market is out. Our positions are upside down. You're down like a couple of grand or more, or a couple of $100 if you have a smaller account. You need to be calm. And these charts were the only thing that's gonna calm you, because you'll know where we can drop to, where we can bounce from, even if it's on a short-term basis. On that note, let us begin. So I'm going to start off with the longer-term picture on the stock market. I drew this chart many months ago. Take a look at it for a second. Let's count to 5 seconds. Take a deep breath. Take a look at this chart. God has given us eyes. Look, and let your eyes talk to your brain. Take a look at this chart. This is going back to the depths of the market, the housing crisis and the mortgage and the CMOs and the collateralized mortgage obligations and the whole mortgage-backed industry, which caused massive, what was a sort of a mini depression in the US stock markets from 2007, October 2007 till March 9th. So remember that day I was on my desk on Wall Street, March 9th, 2009, 2 years. And this is where we are today, in between some pretty vicious drops. These look small. These were when the world was falling apart. So now that you have had the luxury of looking at this chart, just a quick question to everybody. Let me ask a question to Oscar. You can type it in. What does this look like? And this is the overall stock US financial markets, the S&P 500 futures on a monthly basis, going back to 2007 and the climactic bottom, the generational bottom, as we call it, on 2009. 11 years later, this is where we are. What does it look like? Does it look like we're in a bull market or a bear market? Oscar. Okay, so up a bull market. Exactly. The bull market is totally intact. I can make it up. I'm just looking at this, and I'm just a faster, quicker messenger of looking at it. Even a child will say, hey, you know, if my son was, my son used to sit on my lap when he was like a year, 2 years old, 3 years old. And I used to call him the Google boy, because he'd love to type in stuff into Google, you know? And look at him now, 21 years old, you know, moving along, kicking butt. God bless. So even a child, you know, if he was sitting on my lap and he was like, a year and a half old, 2 years old, whatever, when he managed to type, I can't remember, and he'd say, Daddy, it's going higher. Well, tell your brain, Daddy, it's going higher. Okay. So this is your longer term picture of the market. You don't need a guy sitting on the 60th floor of Goldman Sachs on Broad Street. I think they moved their, where's the new Goldman Sachs headquarters? I know it was on it was on Broad, and then now I think they have another office, the World Financial Center, to tell you in fancy terms, like, oh yeah, this is what we think. Well, you're looking at it. Does that mean that each of these candles are a month? A month is a lot, right? A month is a lot. That's 20 trading days. And that can devastate somebody's mind and call in all the bears who will be calling DEFCON 5 next time we have a candle like this. And that's coming. Or even a candle like this, where the S&P drops from 3,000 down to 2,800. So that's roughly a 1,400 point drop on the Dow Jones Industrial Average. This little candle, this one, and then a bounce. We called it. We also prepared people that if we broke below this level, that we would be there was a chance we could go to 2,600. And that was not too long ago. That was back in August. But this is the longer term picture. And thank you for your response. So the bull market is kicking. And the upper end of that bull market was somewhere around 3,500, 3,600. And some of the most bullish analysts have us up at around 3,400 or 3,500. I didn't see any major forecasts at 3,600. But hey, it can happen this year. And most of the gains, in my opinion, this year will happen on the first half of 2020. Why is that? Can anyone guess?
Elections?
Yeah, exactly. First half, and then the nervousness about the elections. And then as if President Donald Trump wins, the market's going to rally again in December. And if somebody else wins, the markets would initially drop a bit, depending on who, if it's somebody like Elizabeth Warren and stuff. And I remind people, she's not stupid, okay? She has very radical ideas on taxing us to death, but at the same time, she ain't stupid. The markets will drop, then the markets will go higher. Because in the end game, the markets don't give a crap about who's in power, as long as they don't change the system. Under Obama, the market went up a gazillion points. Under President Trump, they accelerated faster. Under Clinton, the markets had an unbelievable, vicious bull market. So markets don't care. Markets are apolitical beings, but they like business-friendly leaders like President Trump. Okay, end of story. So this is where we are. Now let's take a look at something which will give us an idea, like, okay, what's the number here? Can somebody tell me? It's 2305. Let's call it 2300. This is a box. This is your trading range for 2018 till the breakout on 2019, October. So October 2018, October 2019. Very simple, back of the napkin calculation. Does it work all the time? No, but does it have a and there's your box. Okay, I shouldn't paint it in red. I should do it on blue. How about that? Do it in blue. The bottom end of that range, 12-month range, is 2300, and the upper end of the range is 2960. Let's call it 2900 for. Let me see here. Yeah, let's call it 2900 just for the hell of it. Okay. So you got a 600. You got a 600, maybe a little bit more range, depth, width of this 12-month range. So if you add 600 to 2964, or 2900, you arrive at 3500, right around here. Actually, more like around 3600 if you take the exact numbers, because that's how it works. You got this. Stocks do the same thing. The longer the base, the breakout is normally the projected move. The measured move is the depth of the breakout. So there you go to 3500. Little trick, huh? That's the way it works. In between, it's gonna go through. It might even go through something like this, for all I know. Okay, let's move on. Now we looked at the longer term picture, the monthly picture. Let's take a look at the weekly picture, which is more important to us traders. Not that a week is a short-term chart, but it's very, very important. It's a long-term chart, but it's good for our trading. The monthly ones don't give us an idea about trading, because you could have options a year out, and then the market just collapses in the middle of the year, goes down 4,000 points, you're wiped out, unless you dollar cost average. So it's great to have a longer term view of the overall market, but at the same time, that's not going to make you the real money, because a lot of things can happen in between. to change the whole directional structure. There is no guarantee. I just want to remind people, and this applies to individual stocks too, on a short-term basis, on a 15-minute, 1 hour thing. There's no guarantee that the structure is going to look like this. What if we get one of these candles, just like that, blood red? Let me change the color. I want you guys to be prepared like that. Boom, like that. All of a sudden, this structure is broken. There are some beautiful channels here. You'll see how they touch and go. So what if it breaks down? Whoa, all of a sudden, this comes into play. What happens if the stows, which are the simplest ways of determining oversold or which are definitely overbought, but moving sideways, which is basically the sign of a powerful market. The fast stochastics, which is a second derivative of the relative strength index, look at that. Month after month after month after month, 2018, from 2015 to 2018, the market rallied. And it stayed overbought. So you can scream and shout, oh my God, everything's overbought, but it doesn't change the longer term picture of the market. And that was also an article I just finished reading on CNBC, coming out of an analyst at, I'm going to post it. I posted the cautionary one, which is important for everyone to read, because Binky Chadha, Indian gentleman, is one of the smartest guys. He was one of the first bulls on the stock market. He's quite worried right now, which is something to look at from a valuation standpoint. From a momentum standpoint, it's certainly markets are moving higher. From an emotional standpoint, trust me, nobody's really euphoric. I mean, that's forgiven. But from a technical standpoint, yeah, many indicators are flashing, serious overbought conditions in the overall market, not necessarily individual stocks, certain individual stocks. So all right, so that's it. I don't want to keep on beating on this chart till you guys get bored, but let's take a look at the weekly. So what are we taking a look at the weekly? What I'm looking at, this dotted line, is basically the upper Bollinger. That's at 33.10. On a real push in the market between now and the end of, let's say between now and not just end of the month, going into Valentine's Day. How about that? We could quite easily, in between 300, 400, 500 point type of drops, retesting the massive, this fat green line is a massive channel breakout that occurred on December 16th, right there. Huge bullish candle, big day, moved sideways, created a weekly bull flag, which went up, pulled back, retested. So retest of this is 3,200. So if we drop, is it 3,200 retest of this? Yeah, so that's not too far away. That's roughly about another 300 points. This was last week. This is this week. So on the upper end, we can get to 33.14. This is on the weekly chart, so don't expect this to happen in one day. All the internals here, simple way of looking at it, are saying A-OK, no problem. The other bullish thing that I want to mention to it is that most analysts are still negative on U.S. company growth. They're all expecting them to lower their guidance. What if they don't lower their guidance like they did the last quarter and the markets rallied like no one's business? What if they beat the lowered guidance for lowered estimates from the so-called gurus on Wall Street and other places, my ex-colleagues? What if they do that? So then then automatically by their mandates, they're forced to raise the estimates. There goes up the next up leg. Think about that for a minute. It's very easy in life to think about the bad things. How about thinking about some of the good things? So on the upper Bollinger, I'm looking at 3,300. If this acceleration channel that started on the 7th of October, right there, this chart wasn't drawn yesterday to make you guys happy. This was drawn weeks ago and updated as it went along. And every single one of those parameters on the forecast have come dead right. It can't get any better. Excuse me. Can't get any better than this. Seriously, from a technical standpoint, these are most probably, and I'm not, again, I'm not patting myself on the back, but because I repeat, the markets are so mathematical, are so structured that if I draw the right structures on it, not to fit my needs, but just the actual, this channel, I didn't just draw it, just say, oh, just so this is what I like. No, this has many touch points. So technically, it's a valid uptrend channel. And you will see that the upper end of that is 33.67, even 3,400. We could get to 3,400 by the first quarter of 2000, by March 31st. So that's this is your lower Bollinger, the dotted line, which also happens to be the 50-week moving average. That's at 3,096. 3,096. So that's roughly a 300-point drop multiplied by 7. That's about 2,100 on the Dow. That's going to freak the crap out of everybody. But it would simply be a retest of the 50-day moving average. It won't be pretty if you're dead long and not trading my charts or lowering down positions or not buying some SPY puts or VIX calls or whatever. So you're going to be like, oh my God, I can't do this anymore, like most weak humans do, which is why there's only a few traders who actually make it consistent. You know that, right? I'd be happy with most of you guys would be, great tactical traders down the road, but I can assure you, many of you won't. I'm just speaking the truth, because, but if you keep on, using your own gut instincts and all the tools that we provide and learn a little bit more, sign up for the advanced coaching sessions to understand the dynamics. And these are simple charts I'm showing. I have very complicated charts that I can explain to you, and you'll see the correlation. You understand what's coming out, then you'll survive. Otherwise, you won't. You'll make an excuse. You'll, say trading sucks. I said, great, not a problem. As long as I'm writing my own checks, who the hell cares what people think? The only person that I think, give any, that hurt my feelings, can hurt my feelings, my wife. And hope God is not angry at me. That's it, guys. The rest of what the world thinks, don't care. Saying all that, this is your daily. So now we're getting closer to the picture. So what's happening at the daily here? One of the things that first should catch everyone's mind, that we have moved quite a bit away from the 50-day moving average. That is called a upside extension, or a what do you call? It is basically an overbought condition. We're hitting the top of that rung, which is around, I told you guys weeks ago, we can hit 3280. Well, guess what? We hit more than 3280. The S&P 500 on Friday hit 3282.99. This is your E-minis. So at this point, we are short-term overbought. Nothing on the internals is showing us any weakness. We do, somebody might say, hey, look at the MACDs, they're starting to cross over. They're really not starting to cross now, okay? They're kind of moving sideways. Let's take a look at the stochastics. They're looking good. So short-term, it's going to be, we still have a little bit of room to move. Futures are up 7 right now, just for reasons I just told you. There was no cataclysmic event over the weekend. And the Chinese are arriving in town to sign the Trade One deal. Look at the skeptics. They're like, we don't even know what's in the Trade One deal. Well, why don't you just read and try to understand what's in there, because it's been explained many times. And they say, oh, phase 2 will never be signed. Well, President Trump even said he might do the phase 2 deal after the elections. Fine, that's great. And the Chinese put out a powerful statement. I put it on my Twitter feed. They were very conciliatory. They were very encouraging. They said this is the type of feelings we should have, attitude we should have as we move forward to further negotiations. And that's the things that you want to hear from the other side. Remember, they're not our mortal enemy. They're an economic competitor. And a competitor sometimes can be looked on as an enemy, but it's more of a vicious competitor. So this is still looking good. A little bit more room to go. 3,300 just around the corner. That's only about 140 Dow points, right? So short term, that's the picture. Now, this standard deviation on the extrapolated, is quite high. I mean, I would say that the distance traveled from the highways, as people should know from my previous videos and the instructional videos on the new member intro videos on Google. Certainly pick up on those a little bit so you understand some of the lingo, because I'm not here to teach a kindergarten class on technical trading on my webinar broadcast. Prepare your, so you guys should at least know the terms. There. So let's just look at it visually. Every time we veered a lot away from the 50 and the 34-day moving average, we'd had a quick 1 or 2 day correction in between the uptrending channel. So what do we call this? Other than Frank, we call it a bull flag. A bull flag can look like this, a consolidation. I've shown that repeatedly on the 1 hour and the 4 hour charts. A bull flag can look like this. where everyone freaks like, oh my God, what's going on? And then boom, it breaks out. These type of bull flags are the most powerful because they are making higher lows, and then they break out more. These move in a box, sideways trading range, then they break out. And when this is happening, everyone's just like, oh my God, this is the end of the world. So this one looks like this. And that's a pretty wide range. I mean, that's not wide range. That's about 300 points. There. Does everyone see that clearly? Yes?
Yes.
No? Maybe?
Yes.
Okay, good. Perfect. There you go. So this one is this one. Right? So if that's the case, so we can move within this band. This is the mid-Bollinger. We don't necessarily need to come all the way down here, which I think we will in the, maybe the first week of February. I don't know. Or something else happens, some extraneous event. Another flare-up with the Iran conflict. Iran's, that goes nuts and hits one of our naval vessels. You're going to wake up with the market down 500-600 points, right here at 3,200. Okay, so all that can happen. So all I know is given the current circumstances, we are extrapolated. I mean, we are quite overbought. A mean reversion, which means coming back to retest. The mean reversion is at this on a short-term basis between now and the end of the month. I am looking at the mid-Bollinger, and that mid-Bollinger on the E-minis, give or take a few points on the S&P 500, is around 32.36. If we start to break 32.36 or 32.42, which is roughly about 240 points on the Dow, and it creates a bar like that, and it doesn't bounce, then we are in for a bigger thump. All right, doesn't change the directional bias. It would be a screaming buying opportunity as long as things remain on an uptrend. This at that point will reset. The stochastics will reset like this, and every time it gets like this, I told you guys a zillion times, you want to buy. You want to be an aggressive buyer. And this is the part which people are not aggressive buyers because they're all like, in bed with CNBC reporters. Like, oh my God, that's it. And the guys on Fast Money were pretty much dead wrong most of the times. You ever hear those guys? They're very smart guys. They have high-paying jobs. They run their own companies. Aside from if maybe one or two of them, they're all dead wrong. It's just amazing. But that's life. Doesn't matter if you're right or wrong. If you're in that position, you're still making money. What do people have money with them? You ever thought of that for a minute? Exactly. So, bottom line is this reset will come. And I believe it'll come, I think, maybe the first couple of days in February. And then you're going to get a ramp up into Valentine's Day. Mark my words. All right? But this reset has to happen, just so you guys know. So whatever you do, keep this position sizes somewhat moderate. Don't go gung-ho. We have a lot of winners that we're producing, but don't put all your eggs in one basket. Don't go nuts and buy, like, if you're trading with a $10,000 account, you put like all 6,000 in one. Yeah, you might get a hit. I mean, you look at that, the Teslas and stuff, and Ulta Beauty and all that. But then what if it doesn't go? Then you're done. Okay, blown up like an Iraqi militia IED right under your Hummer. You're done. So moderate. Take profits faster. Keep on tracking the charts, and well, you know the routine. So that's what I'm saying. So again, when we on an up, this is very powerful. The slope. The angle of the 34, which is always in orange, and the 50-day moving average always in red. In my case, that's how I put the colors. The mid-Bollinger, these are all major support levels. So, and they're uptrending. Okay, let's move on closer to home, which is where options can be traded off the daily. Perfect, not a problem. Options mostly are traded off if you want to make some fast money. Fast, quick, 60, 70, 100, 120%. This is more of a swing trot. This is the 1 hour chart. See, 1H, 1 hour, 60 minutes. This is your 60-minute chart. Well, everybody was freaking out. Well, not everybody. Some people, I'm sure, were freaking out on Friday. I told you, there are some two major support levels here. One is 32.65. What did the markets do? They hit exactly where I said it was going to get hit. This is what the stops get taken out. This is what the emotional trader or most average traders who are just trading off price and volume and God knows what they're trading off. And they freak out. They're like, okay, I'm just, I'm just throwing everything out. I'll come back next week. Well, come back next week. Futures are right now up 7. Who knows? Futures might open up 10, 12. So the few things that you bought at the end of the day, like I told you guys to buy, you're going to take some nice profits. And you just might walk away from the screen and say, hey, just made my day. Okay? If we break this, this level comes into play. Now, this line here, what is this? What is this big fat green line? Quick, guys, quick, somebody.
Previous resistance levels. Now it's a support level.
That's not the answer I'm looking for. Somebody else, please. Yeah, what you said is technically correct, but that's not the answer. That's not how you should be looking at this chart. What happened here on the 8th? Always on the 8th, guys.
Upper band of the Bollinger.
No, I know you're trying, but somebody else. Nobody sees it. Okay, let me just not waste your time or mine. No, this is the massive ultimate breakout towards 29,000, ladies and gentlemen. This is a massive W formation that I kept on talking about, inverse head and shoulder. So here you are, and you break out, boom. And that's exactly what happened. The market entered a higher zone and then hit 29K here. So the way you look at these type of charts is we failed here back on the 2nd of January, right there, big sell-off till the 3rd. Told you guys to buy it. Okay, right there. We hit that level. We tried to go back there, but we got rebuffed at the downtrend line. And then we hit that level again that we had basically, it's a triple top breakout or a double top breakout. And bang, the markets went. It went up, retested that breakout level. By the way, this is something I want to point out to all of you guys. I wrote this a couple of times because what I try to do, I'm not going to write an encyclopedia on my real-time Twitter feed. But if you just read it, and if you're busy during the day, read it, at the end of the day, if you're serious about making money in these type of markets, which have been algorithmic markets forever, for years and years now, I wrote it. Major breakout levels. Markets coming in to test the breakout level. That's exactly what the market did. It pulled back and it retested that breakout level. That standard procedure happens almost 90% of the time. You break out, and same thing with stocks. So this is a large inverse head and shoulder, but forget inverse head and shoulder. Let's say the markets went up like that, failed here, then broke out. It is inevitable just to see if that is now, like you guys correctly pointed out, if that breakout resistance is now, again, I repeat, as you guys correctly pointed out, whether or not it's a floor. So on a short-term basis for options trader, that's the floor. And if the floor breaks, you got the next level of resistance that support that comes in, which is around 32.50. If all hell breaks loose, we are going to basically come into this green zone here, not the green zone in Baghdad, but the green zone, which was a sideways consolidation. Look at that. Look at this. Let me change the color. Actually, I can't change the color of that, so I'll change the color of this. Choose pen color. Big breakout back in December. Look at that. And then the markets moved sideways, broke out again, came back into that zone, moved sideways, broke out again, but this kept on acting, the 3,200 level roughly kept on acting as a consolidation. So If all hell breaks loose, the market's going to come and retest that. And that's quite a bit of a drop. I mean, you're talking about 40 points. Yeah, you're looking at 400 points, not more. But let's not go there till supports are broken. So what I want you guys to concentrate on, or just try to understand, that when I'm showing you a chart like that, the first thing that should hit your head is like, yeah, that's what the market just said F you to the hardcore shorts, which they've been saying for hardcore shorts forever, but boom, breakout. And that's what it did on Friday. It came back and retested it. Okay, end of story. And for options trade is very important because we're looking at short-term pictures, a couple of days at a time on most of those options, especially if you're trading Netflix or Apple or or Tesla or Facebook or Amazon, which needs to really ramp up. Amazon's actually the weakest of the fangs. We're going to take a look at that chart. So therein, in my opinion, lies the opportunity. So this is the 15-minute chart. This is very critical. This is the first chart that I look at when I turn on my machines in the morning. If I see a big thump down, futures down 10, 15 points, of course, I pretty much connected with with all the news services. I look at one of my iPhones, like, okay, what's going on? 5 in the morning. Sometimes I wake up, sometimes actually I automatically wake up around 5 just to check things, and then I fall asleep again. So bottom line is, this is a beautiful structure. It's a rising wedge. A rising wedge looks like this, just like that. And then once you get to the top of the wedge, it normally has a consolidation. That is exactly what happened. Will this consolidation break out towards retesting the highs again? Most probably yes. This week, or maybe by Wednesday when the Chinese leave. Remember, there's always a sell the news type of thing. The Chinese come, everyone's excited, ink to paper, all T's crossed, I's dotted, all kinds of stuff. And then markets say, oh, okay. So market might rush into that and then have a quick technical sell-off. So the short term, the first chart that I look at, to me, this chart makes complete sense. This is the Fibonacci level. This is the Fibonacci 50. I don't want to, like I said, I don't want to teach people technical analysis here. That's for them to get into the introductory videos and then sign up for the advanced coaching sessions and all that stuff. But I'm just showing you the clear picture of what's going on here. Okay, next one. The next two charts are, let me just see. This is of Thinkers TD Ameritrade. This is the same depiction of the weekly chart, except you see it in the form of what drawn on the TD Ameritrade or Thinkorswim platform. TOS. Upper Bollinger 33.15. I think that's where we're going. I think that's where we're going. Like this week or by end of January. 33.15. No, I think it might even go there this week. Upper end of the range is 3,400. No, I'm not looking for 3,400 in the S&P. You're talking about another 800 points on the Dow. I don't think that's happening that quick. Who knows? Who knows? We don't know. But this is good. When we look at the same thing that I explained to you guys on the 1 hour chart, this is what a 1 hour looks like. This is the trader's chart. Okay, just the way this is the trader's chart, the 1 hour. See that? Where you don't jump around every 5 minutes, but you actually start to see patterns emerging. Stochastics oversold. See how beautifully it's climbing up with futures up 8? 8, the number, guys, the infinite loop. Globex futures are up 8. So very simple. Somebody says, well, I don't really understand technical analysis. No problem, no problem. Just follow this chart. Simple thing you have to know. When you get overbought, you're going to see your P&L much higher on the stocks that are moving with the market. So you want to be selling, because once you get overbought, you generally get a pullback. Sometimes you get like shallow pullbacks. But generally, if you get overbought, which it can be by tomorrow morning, if you just open up 12, 15 points, we're going to be right here. The stochastics. This is not rocket science. And if you look at my Twitter feed, which all of you should look at if you care about not losing money, then you will see that I have pinpointed in many of the charts. I've even circled. It's almost like kindergarten style, just to help people. Like that, showing you that when the markets get oversold, this is what happens. So when the stochastics, the internal internals, this is the F stows or the fast stochastics, get this oversold. You don't need to know these terms. Just look at it visually. A child can trade this chart, honestly, better than adults. You want to test it? You got a 3, 4, 5-year-old? I don't have one. You know, my one's like much older now. So they'll be able to trade these charts. Give them some building blocks. Said, okay, where do you put in 5? And they'll put the 5 right there because they're going to match the patterns. Look at that. Sometimes it's a little bit of a fake out. Gets oversold, moves up a little bit, then falls a little bit more. But most of the times it's this. So this one reminds me, children are very, children are astute observers of patterns, right? They are. All kids. So if I look at this, this reminds me of this, or this, or this. What happened once we got that deep oversold? Boom, boom. Now these are short rallies. They happen, it can be overnight or maybe for a couple of hours during the day or maybe for on a 1 to 2 day basis max. So as an option trader, why not? You're gonna make 120% in 48 hours. Are you complaining? Exactly. So this is pattern recognition. You don't need to know anything other than your eye looking at it, and that's the simplest way to take the baby steps towards understanding technicals. Am I clear on that, guys? Yeah, it's not complicated. Okay, good. Oscar said, yep, so that's good. So just follow the stochastics, the 1 hour. The 15-minute jumps around more like a monkey on a hot tin roof because it's getting overbought, reset every 15 minutes, right? So futures up 8, it got overbought. So it might slip a little bit now and get oversold again. But the 1 hour is the one that you need to be really looking for to manage your trades better. If you're doing fast trades during the day, you know, buy some spy calls and you want to get out during the day, then the 15-minute charts are the place to be. Okay, let's take a look at something I want to show you guys. I'm going to bring it into the picture, which is the VIX. So let's take a look at the VIX, what the VIX is telling us. This is a 1 hour chart of the VIX. The way I look at it very simply, I look at this as the fast stochastics. This is how quick it is, the faster. This is the slow stochastics. The slow stochastics are actually starting to climb up. So that means there is some underlying positioning by systematic CTAs. Those are hedge funds which automatically go in and out of the market on the VIX and the SPYs and such. And Google it, Google the terms. That we can basically move up here. If we move up here, that means the VIX is going to jump to all the way to this major downtrend line, gap fill, resistance. You can see that. I draw it very clearly. It's a very beautiful structure and easy on the eyes. Okay, this one of these candles like that. We had 2 candles, right, which moved up the VIX. The market dropped 133 points. You get one of these, then the markets are down 400 points. And vice versa. You get these butt ugly bearish red candles back towards that gap fill. They're all very structured. That means the markets are down 600 points at one point. I mean, sorry, up, because VIX is a contrarian indicator. That's all of you guys should know. So based on this, I am looking at max support, resistance at around 1360, 1380. That means the markets will be down about 200 points. In the meantime, I don't want to get into the nitty gritty of it. This is what the VIX looks like. It's still within a downtrend. This is what every time it gets up to the downtrend line, it gets slammed. So, and if it breaks out of there, you better lower your long positions and not. These things move very fast, even though it's a 1 hour chart on the VIX. So I will sometimes use SPY puts to make some money, but I'm not going to go to bed with the SPY puts because I'm going to wake up tomorrow morning completely demolished on the SPY puts because the markets will open up substantially higher. That's only if this gets very overbought. So anyway, just follow this. The VIX is starting to rise. Start getting cautionary. It, like I said, no juice. Because if you look at the cloud cover, or what we call Bollinger Bands, this is not Ichimoku clouds, these are Bollinger Bands, then every time that it gets towards the upper Bollinger, it gets slammed. Will it happen tomorrow? Who knows? Futures are up right now, so the VIX will most probably open down here. So get used to looking at this chart when I show it. Now, Somebody says, well, what about the longer term picture? I mean, more of longer term picture. This is the longer term picture of the VIX daily. This is the VIX daily. All right. I know the chart looks like a matrix. It is a matrix, guys. So what am I looking at here? I am trying to read the tea leaves. And I'm pretty damn good at reading the tea leaves. What's happening here? The S stocks or slow stochastics can't seem to find enough juice to really break out and move there, in which case the VIX would be shooting up towards 15 and the markets would be down 500 points. Just can't do that. Even when they hit Boeing, this, that, and by the way, you guys do know, and which I posted out, the Iranians, as I said from day one, when the Ukrainian airliner was shot down, what a tragedy that they were the ones who accidentally shot it down, right? And that's exactly, they finally admitted it. It is not a Boeing 737 problem. Boeing is the ultimate multi-month, multi-week swing. That's it. Boeing is a small percentage of the U.S. gross domestic product. That's how powerful Boeing is. So all those reporters can piss on Boeing, blah, 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 blah. That's all you hear, negativity. That's all the time you hear. Boeing did, what is Boeing Exxon? I mean, they screwed up a little bit. Seriously, that's my opinion. And the CEO, the new guy came in, and he's doing the right things. So bottom line is, even with Boeing down 6-7 points on certain days, they can't break the market. But we are at support level. That's what this gap fill is all about. So if somebody says, well, we're at support, can we go like this? Sure, we can. So it says, what is the probability of that happening? Well, looking at this, the probability of that happening is pretty low because this one keeps on wanting to go down. Once it comes down towards that 10 RSI level, this is the stochastics, that's when you want to buy a nice amount of VIX calls and SPY puts. But we're not there. Every time that it tries to raise its head, yeah, a little green candle, blue, big deal. There was a little green candle here too. And then it gets slammed down. So I watched the daily and the week. Now this is a little bit more advanced, but hey, it's my way of looking at it. What is this pattern? Somebody step up and answer me. This is since mid-November. What is this pattern? Nobody? Huh? It's an M pattern. What's an M pattern? Somebody got that right.
It's bearish.
So what's it called in general terms?
Double top.
Yes, exactly. Thank you. It's a double top. What's a W pattern that I talk about? Dragon bullish. Sounds like Chinese New Year, right? Dragon bullish. Dragon bullish is a W.
Bullish, that's
Is a
double
W.
bottom.
Huh? And yes, it's a double bottom and a W pattern. You want to be looking for W patterns. This is still a bearish head and shoulders with a neckline here. It can, for a day, slip below the neckline. So where can the VIX go? The VIX can drop to 11. Or even if the VIX drops from 12.56, where it closed at, to 12, that means the market's up 200 points. It's very correlated with what's happening externally with the SPYs, just so you guys know. Okay, and this is telling me that there are still systematic sell programs on the VIX. Short term, this is the daily. All right, let's get out of this picture here. Finally, before we look at a couple of stocks, I know Zafar has, and all of you, by the way, put some nicknames on your profile on the website. It's more fun, you know. Just go into the profile and just put a nickname. You know, Paul goes with volatility 888. Put that there. So this way we don't have your first name, last name, and you know your rich uncle's name and stuff for everyone to see. All right, how about that? Do that. So okay, and what's the last one? I was trying to show you guys. 1 second. Okay, this is the NIMO, the New York McClellan Oscillator. This is the first thing that I'm looking at on the NIMO is this. Very oversold, and I like that. I like things oversold. Why? Because that's when you get the best prices. All short term on the daily. Almost at the lower Bollinger, not quite yet. And this one needs to basically start to go like this, but movements in the market happen before the MACD turns and before this really goes this. Once it goes this, when the full stochastic go like this, too late. You can't be walking into a market up 400 points. Yeah, you can get a little bit of money here and there, but that's too late. You need to be set up prior to it. So with the deep oversold conditions developing on the full stows on the daily New York Stock Exchange McClellan oscillator, we call NIMO, I would rather be a buyer than a seller. And you can see that. Okay, so I like this. I've talked about many times in our previous webinars, if it ever gets to these levels, these are the levels where you don't want to even turn the TV on because all they're saying is Armageddon. When you get minus 40, minus 33, minus 52, minus 65, minus 60, that's like markets are just bang, bang, bang down. So those are the days you want to buy. But no one does. Most people don't, just so you guys know. All right, that's the beauty about the stock market. When things are on sale, it's the only asset class I know when nobody wants to touch it. And I've managed institutional money. I've managed retail money with our teams on Wall Street for many, many years. I know how people think. I know how traders think. Trust me. So they all think the same way, pretty much. So, so that's it. So I'm liking this so far. The other one that I'm going to show you guys very quickly is my SPX 533 chart. These are kind of predictive charts. We do have a bearish candle here. This was Friday. So we need to see if this is negated. But this is what I like. Negated meaning like it turns hollow. And so again, these are things that, I'm not going to, I explain these on my advanced coaching sessions like big time. And I think I have some videos on that on the new member intro videos. I've been tracking this for years. Okay. These are swing predictive charts, like trying to read the crystal ball. I like this. The stochastics are still moving higher. You can even put a pattern on it. It's a W pattern. This is kind of flat. So there is a negative divergence going on the MACD as the markets are climbing higher. So that's what I'm saying is we have to be careful. But nothing too crazy. One other chart I want to show you before I'm going to get into the questions is these are things that I look at on, and this is the quad platform that I talked about on my new member webinar that some of you attended. I didn't get a chance to put it up on YouTube yet, but this is what we talked about. Oscar was there and Zafar was there. So like looking at this, I can trade off like a mechanical robot. You can trade off the other charts like mechanical robots too, but this is, see how easy on the eye it is? There's your big gap, 3,200, 3,206. Are we going to fill that gap? Absolutely we will. No question about it. So that's a 70, that's almost a 80-point drop from the highs, 80 times 6. That's 500 to 600 points on the Dow. It's coming. Okay? It's coming. Somebody said, well, can you tell me exactly when? Sure. Why don't you give me like, $20,000 over, just wire the money into PayPal and I'll tell you. Well, I'm explaining to you guys that it's coming. Most probably it's going to happen. Most probably the 600-700 point drop will happen. After, it's not going to happen before the Chinese signing the deal. Maybe it happens the first part of next week, or most probably first week in February, just so you know. All right, because this gap has to get filled. Gaps always get filled. All right, so it's right there. It's very clear. In the meantime, look how easy on the eye it is. I can literally look at this by the candles and tell you what the market's going to do on a 15-minute basis, and I refuse to do that. I don't refuse to show these charts with the thing, but I refuse to write down when you guys can see yourself what these numbers are. So I do write down the numbers, but I don't want to spoil people by saying, oh, the market's going to be there in about 20 minutes, so you can do a 20-minute trade, because you might not be fast enough. And then you'd be like, why the hell did he say that? So I can trade out these charts very fast. This is your big breakout right there. That's what we came to retest. Everything is looking good so far. And the simplest thing that you guys need to look at, especially for newer members, is I tend to have markers on certain on a bunch of my charts. The markers look like this, ladies and gentlemen. When I put a marker, watch that level. The slow stochastics are almost oversold, not fully. By the time they get oversold, and I have repeatedly shown this on my charts, with the markers on the prices as well as the internals. And this is not rocket science. We could fall and retest 3260, 3258. This is S&P 500. And that's, nothing to be alarmed about. By that time, it's deep oversold. You want to be a buyer.
Hey, Frank.
Let 1 second. Don't ask questions 1 second yet. Let me just show this. Look how deep, look how it gets. Exactly. Now, why am I showing this when I already have this on my real-time Twitter feed? I'm doing this to have you guys focus a little bit more on my real-time Twitter feed, where I have actually markers showing when this is almost a 90% accuracy rate of the quad platform that uses bar chart. Almost a 90% accuracy rate. It is. That by the time the slow stochastic get really oversold and we are touching the bottom of the Bollinger and all that stuff, the 50 SMA simple moving average on the 1 hour, it's good enough to buy and do a trade overnight or during the day. Question you were asking.
Yes, Frank, going back to that gap below.
Yep.
What about the after hours? Because when Soleimani was taken out, it actually filled that after hours. Would that count?
Yes, it did. Yes, it did. So basically, this is the pre and post market. They don't show me pre and post market on that. That's a very good point. That's a very good point, because this is real time, daily stuff. So let's take a look at to see on the. That's an excellent point, because we were down 400 points. So let's take a look on the Thinkorswim, which is giving us a full after hours picture. 1 second. Did everyone understand what Paul just said? A lot of the time you will get resets, technical resets into oversold territory while you're in La La Land, dreaming, because it's happening in the Globex markets. It already does that. Most vivid and glaring and epic example was when President Trump got elected and the futures went down almost 1,000 points or a little less, and then see you later, higher. So that was, that goes in the history books. So let's take a look at this here. Let me take the lines out. Clear drawing set. Perfect. So when we took out the Iranian general Soleimani, right? Yeah. So this is what happened that night. So this is what happened, and so we already was there a gap? See, futures don't they don't have that much of recurring gaps because they're trading 24/7. Let's take a look at the daily. So what happened here? This is what happened that day. We came, how I was talking about mean reversion, that we need to come back and alleviate short-term overbought conditions. In other words, come back to the highway that we should normally be traveling in. Well, guess what? That's exactly what it did on that night. It almost kissed the 34 SMA. I use SMAs primarily. 34 SMA, simple moving average, right there. See that? And then a hammer. And I did say futures were going to bounce, ladies and gentlemen. Why? Because I have some premonition about what's going to happen? No, it's because I heard the communique from the Iranian foreign minister, who basically said this was a proportionate attack, and that they're not going to escalate the thing. And we had already warned them. Of course we did. So I said, that's it. Futures are going to go higher. And they, of course, hit a base that it's so remote that there are not that many U.S. soldiers there anyway. It's a couple of, it's kind of sad. A couple of Iraqi soldiers were, military people were taken out. Anyway, so that's what happens. All right, this is where we are. All right, enough of this. Let's look at a couple of charts. We're going to wrap this up. I remember Zafar wanting to look at BIDU, right?
Yes, Frank.
Okay. So BIDU, we talked about it earlier, and just for your information, this is what we're looking at. BIDU has defined gaps. One gap is at 150. The second gap, this is the gap fill when BIDU fell. Earnings, I believe, 153. It fell to 134, 20 points. Let's put a price on it. On the left side, 134, and this is 150. See the gap? There. Let me put a price on this. There, 151, 152, 134. So it's from a technical standpoint, it should gravitate before its February earnings towards that 150 level. Might even open up $4. So nothing. It's at 144. I haven't traded BIDU, I must admit, over the last couple of, I would say, quite a few weeks now. So this has now been brought to my attention, so I will certainly cover it. If BIDU has terrific earnings, it's going to hit a downtrend line, which is the weekly downtrend line, and the stock is going to hit 160. So this is a nice shot. The candle structure is beautiful. It is a inverse head and shoulder or a cup and handle, whichever way you look at it. I look at it as a double bottom bullhorn pattern. Look at that. Stock's going to 160. With China in the focus, signing the trade one deal, China liquefying and pumping credit into their economy, money into their economy, giving a break to a lot of Chinese smaller firms so they don't go bankrupt. These are all good things for the Chinese economy, which BIDU is a beneficiary of. Next stock. No stocks? Anyone?
NVIDIA.
Hi, Frank. This is Xavier. I also saw Beyond Meat. I know that we call it bearish, but it turned out bullish, and it
No,
seems like
Beyond Meat has really turned around. Okay, Beyond Meat, the few cheap calls and stuff, I got blasted. I mean puts. So it doesn't matter. That's why they're lottos. You know, you don't go crazy.
yeah.
Beyond Meat is actually on a major technical breakout here. So let's take a look at it. This is a chart of Beyond Meat that I had drawn a while ago. So I'm going to clean it out a little bit so everyone can see it. It was trading in a range for a while, and we made some money here and there. But then the stock has really broken out. Now, one of the reasons why it's broken out, can somebody tell me why it's breaking out like this?
It's a McDonald's news, I think. It was
No,
that
the news is definitely causing it to break out, but why is it technically breaking out? I know you guys know the answer. You just have to think what I'm asking. Why did Tesla go up and double within 3.5 weeks, 4 weeks? Yeah, the news was positive. That's simply a catalyst, but why did it do that? Come on, guys.
It
No
broke
one?
out at SMA. I don't know what that red line is, but
No, listen, don't get technical. It's a simple question. Stocks like Beyond Meat, let me walk you through this answer. Stocks like Beyond Meat and Tesla, what do they have in common? Oh, by the way, when I draw these dotted lines, that means they're gaps, just for newer members. What do they have in common, Beyond Meat and Tesla?
Tons of shorts.
Thank you. Tons of shorts. Tesla, even as it was going higher, these idiots, not idiots, they're like billion-dollar idiots, right? They're all short. Now they're down $4 billion on their hedge funds. They're probably going to be down $5 billion by the time all is said and done. So Beyond Meat was the same way. Heavy short positions. Like, oh, Beyond Meat, they all suck. Okay. So it broke out. So that's one of the reasons stocks move. Like, look, stocks don't go up 10, 15, 20% in a day because all of a sudden new buyers are coming in. New buyers are coming in, but the primary force of those type of moves, like you see one of our little biotech stocks, they go up like 70% in one day. Why? All of a sudden it's all new money? No, it's new money based on a good news. Plus, they were heavily shorted. Remember Rite Aid that we traded? The stock went from 8 to 22. Some of you did that. RAD, Rite Aid, for God's sakes, your neighborhood pharmacy. Why? Because they're all short. Or some major hedge funds were short. So short squeeze is a beauty. Blasting the hardcore bears and the shorts out. It's not, it's, you know, so Beyond Meat's the same way. It broke out. Now, if you, this is what I like about it, and this is what I was expecting for a while, that if it breaks out, and there's some good stuff, yes, like Zafar said, you know, for remind me, I call you Z. So it's like, just a lot of good news coming out. So at this point, it's got one other gap fill at 121. 121. You put the price there. And this is a fast moving stock. So for momentum traders, it's a beauty. It's a beauty. On this one, I'm going to put the price here. It's very defined what's going on. I'm going to draw something which I had drawn before. I don't know where the line disappeared. It's called a macro falling wedge. Anytime I'm writing that about a particular stock, there's a good shot that stock is going to make you a crap load of money if you have the discipline to hold it for a few weeks or a week or two. Macro falling wedges are the most powerful patterns once they break out of it. I said that about Netflix, if any of you remember, when Netflix, my friends, was being pissed on by every single analyst, trader, and everybody out there, when the stock was at 200, 180 bucks. I showed Netflix. I'll show it tonight. Drawn way back. I covered it extensively on my thing. I said, this falling wedge is going to break out. You had analyst downgrades, blah, blah, blah. Netflix is running out of money. All the garbage thrown at them. Boom, it broke out. See you later. So this is a falling wedge, and it has broken out. Netflix did, I mean, I'll show you that. It kind of went like this. This one's kind of taking its sweet time, which is good, which is good. So at this point, you got 103 and 120 before it gets fully oversold. MACD is looking good, expanding. Nice. Look at that. It's short-term overbought, but it looks like it wants to move sideways. That means any dip is going to get bought at this point. I don't know what the short position is. Paul's great at finding that stuff out. What the most current short position is, but let the shorts stay there so we can burn them as it's moving higher. So this is, yeah, definitely something that can move higher. Beyond Meat. There's a big gap here. I repeat, that gap is 120 to 103. There. It's filled this one. It went through it. It's a very fast moving stock, I warn you. Don't go crazy with it. And if you go crazy with it with a lot of money, then you better be fast in taking the profits. Because all of a sudden some machine will come in and boom, one program will come in and drop it like six bucks for no reason. Even though the chart pattern is great. Now, if somebody's really bullish on it, this is full pattern completion, 160. Can this happen? And I'm going to go out and say it. Can this happen on earnings? Yes. Yes. Can this stock complete this pattern? Remember, it stayed in a band of $10, $12 for months and months since November. Now it's breaking out. So why can't it go here? Looks like a frying pan. But yeah, I'm serious. The most bullish thing would be 160. This was a trading band. The stock was trading at between 140 and 170, right there. It broke below that in October. So now I would say that we could get 140. Yeah, cult stock. Yeah, a lot of stocks are cult stocks. So they said Apple was a cult stock. They said Microsoft, I remember years ago, it's a cult stock. Tesla's a cult stock. Beyond Meat is a cult stock. So what's the problem? It's not a problem. You know, great companies always have severe, serious believers, especially revolutionary companies, which are disruptive technologies, have serious believers. It's okay. Don't listen to the reporters with their cult stocks. What the heck do they know? So saying all that, you want me to look at US Steel? Is that what you're asking? X? Okay, good. So US Steel looks like shit. I'm sorry. Okay. My apologies. Okay. There's nothing there for me to get excited about. Yeah, if you want to get 50 cents on this, there's nothing there on the daily to excite me. Nothing. All right, so I'm just telling you, it's a waste of money sitting there. Wait for a technical breakout. Wait for something like US Steel breaking over 1275 or at least coming towards 12. This is like bottom, so don't expect too much down either. 10 is okay. US Steel ain't going to 961. But as in using that capital to make far better money in some of the others we're talking about, absolutely. US Steel is dead money, technically speaking. Nothing there. If it's breaking over the this is the daily chart over this is your 20 the 20-week 20-day moving average. This one, no, not the 20 days. Is that 20-day? What's the blue line? No, that's the 5-day moving average. So it's not even there. Like, what's going on with US Steel? Why does it look like such crap? I haven't seen this chart in a while. Yeah, it's a great swing play. And of course, you could get any type of major catalytic news, catalytic conductor. I don't know. Short term, yeah, you can trade the stock 1179, 1065. Sorry, it doesn't excite me. Next stock. Anyone? Paul, what do you want me to look at?
Netflix, please.
So let's see if I have Netflix's classic chart. This should go to MoMA, Museum of Modern Art. I'm telling you right now, this is what I had drawn. And I had explained to walk people through it, that this is what's going to happen to this baby. 2 macro falling wedges. Not 1, 2. So let's walk you guys through it again. I think one of my trading dogs just got excited when he heard Netflix. Hey, Bruno, what you doing? We got Bruno, Enzo, and Romeo. How do you like that? Okay. So Bruno, like, all of a sudden his big ears are flapping. He's like, hey, you're talking Netflix? So I'm gonna move this so it doesn't cloud the thing. So this is what I was talking about. See these macro falling wedges? Oh my God. And this was a trading band on Netflix. The trading band on Netflix is 386. See how similar this is? These are multi-month, by the way. So I was showing people like, hey guys, we need to have patience. We need to buy into it. Some days we're like, what the hell? Stock was up 5. Now it's like down 6. That's all machines. But it's doing its job. It's doing exactly what we think it is. Okay, let me just clean out a little bit and I can tell you that this was a humongous swing trade winner and day trade winner at times, of course. Don't bet against Reed Hastings. Isn't he stupid? I was never a Netflix watcher. Yeah, here and there. I binge watched some of the shows on Netflix. The content, they're like comparing it with Disney. Disney's for kids. All right? Family oriented. Netflix shows, I just finished binge watching for over the last couple of days. This show I would never watch. Messiah? Has anyone seen it? Mind blowing. It's like completely weird. It's all about the Israeli-Arab war. Then so many great shows. The content on Netflix is sick. And they're comparing it to Disney. Yeah, right. Okay. All right. So basically, this is what's happening in Netflix. The full Netflix short term on a swing basis is pretty much fully overvalued at around, you see this number here, 338.72 right there. Let's call it 339. All right. It hit 344, and we were trading it. I'm a very fast Netflix trader. I take increments of $5 to $7 on Netflix, just so you know. So at this point, what one thing I don't like is we had a short-term reversal candle on the weekly. It's an inverted hammer, not red. It's still green. That means net buyers were still there. Volume was still green. MACD is still green. But there was some profit taking on it once it hits that 340 level. Now, why did it do that? Yeah, technically quite easy to explain. Why? Because it did this cup and this huge move up from 297 to 340, and then it tried to break out and then didn't have basically couldn't sustain the gravity of this resistance, which is around 340. So that's your longer term picture. Pattern completion on Netflix is not done till number 1, 373. Channels tell me 360 and previous highs. Oh, this was a major resistance. See that? This band, 387 and 231. So on good earnings, Netflix will hit 387, jettison forward, and shoot up towards 400. Now, let's talk about short-term trading on Netflix. Let's take a look at the daily. So these are the two macro falling wedges that I had identified, and I didn't hear anybody out there talking about it. Not Kramer, not the so-called great technicians coming on fast money. Look at this. Bang. Bang. We called it. So, Oscar said, great show. What? Which one? The most recent one that I saw, Messiah? Yeah, seriously, man. Okay. This is your daily on Netflix. So this has a lot of congestion at this level. So I would be very quick on the trigger with Netflix. There's a lot of congestion. See that? It is still, if somebody is as we are quite bullish on it longer term, you see a lot of congestion, a lot of red candles. So some hedge funds are adjusting their position. It is still on a, see this uptrend channels? It's still projecting out to a 350, but look at the congestion here, right there. So if you look at this particular one, it's kind of a bearish M formation. That means I would be a very aggressive buyer of the stock. And that's partly because it moved so fast, so furious, got seriously overbought at that 340 level, which is where the breakdown happened. So I would be more of an excited buyer at 318, but hey, stock's a great stock. So this is what it's doing. So as from a day trading standpoint or overnight, sure, the stock's great. But you can see, I repeat, lots of institutional hedge fund activity, big sell candles, couple of, on a day that the market's up, Netflix is down. We've seen that, often. So from a day trading standpoint, you want to use the 15-minute charts, and that should answer your question. It gets overbought. So I like this chart to trade off Netflix, and I'm just going to draw some thick lines. There's your trading 342, 322. You got a 20 plus minus trading on range on Netflix. 338. These are all inflection points. Supply zones, the sellers come in. 340, they always come in. 322, they seem to come in on the buy side. This on the sell side. There's a level here, 327. So that's how I would trade Netflix over the short term. Any other quick questions? Any other
I know it's getting late, but I was wondering about Roku. It looks really nice on the support level there.
Yeah, Roku. I am long. I'm down on it because of the Friday's quick thing. This is what I like about Roku. My chart on Roku on bar charts is more easy to see. The daily chart on Roku is showing lots of red candles, but this is the one I'm trading off. Let me pull in that chart. That's another heavily volatile stock, as we know. This is off Quad's bar chart. This is what I'm trading off Roku. All right. I always, again, I repeat. By the way, when I draw these dotted lines, yellow dotted lines, those are pivots. Pivots are important. Pivot support, pivot resistance. We want to be above pivot or gravitates towards that. But normally on a strong stock, you want to be above the yellow dotted line or the pivot. This is a gap somewhere up there. Okay, let's put the markers in place. Let's look at this. Draw this line. Remember, these are not stocks for people who just want to be lazy bums. All right, these are stocks for guys for traders who are somewhat active, don't want to fall asleep at the wheel, because these stocks will crash you and burn you. All right, just so you know that. Great companies, but they'll crash and burn you. So just warning people. You want to be a Lamborghini driver, you better know how to drive those cars. All right. You want to be a Honda Civic driver, you're fine. So that's okay. You know, I'm talking about stocks. So you want to trade the Walmarts and the McDonald's, yeah, those are like driving a normal, normal car. You want to drive the McLaren, 720S's and the Lamborghini Huracans, then you better know what you're driving, okay? So these are the Lamborghini Huracans of options trading. So just keep that in mind. That's why I follow these charts like thing, big time. So you got major oversold conditions here. This is a 1 hour chart. That's what I'm using. I am looking at a trading band of 127. You can see that very clearly, going all the way back to December, all the way back to December 16th. Defined trading band of 150 on the upper end, multiple inverse head and shoulders, but let's keep it simple. There we go. Technically speaking, as long as 126, 127 holds and we start to see the green shoots appear, like this, just the way it appears after a big sell-off, you want to be adding to that hard, because the stock's going to jump up to 142, which is the first neckline, right? On a W, there's always a neckline, first neckline, and then the top neckline. This is the top neckline right there, 150, 150, 150, 127, 142. So I would be looking to trade this stock, like I said, by the one, what do you call, on ROKU. Where's that on my screen? I believe it was the 142 and a half. Or if you're following the charts, you can buy them closer to the pivot. You can buy the 135. No, I think I said something. I can't remember offhand which strikes I recommend, but you can basically, depending on your capability of buying, you can buy closer to the money, or you can say, nope, I think the stock's going to jump hard and furious based on this chart pattern. In that case, you want to buy a little bit out of the money. You can buy the 137s, 140s, but this is the pattern I'm looking at. So this is the way I trade ROKU. I'm not married to this stock. I like fast dating this baby. All right, it's great. It's a great stock to trade. So that's your answer to your question. Is that clear? Z? Hello?
Yeah, sorry, I was on mute. Yeah,
No, that's fine. Okay, guys, so I'm going to wrap up. Thank you for attending. I think it was a great session. Like I said, get some great referrals, get more people like yourself, clones like the Oscars and the Z's and stuff. You guys have a lot to learn. I have a lot to learn, okay? I react to such situations faster. I'd like to be a far more efficient predictor, which is very hard to do. I can't predict, but I'm constantly trying. Futures are up 7.5 points. It's an excellent session. Thank you for attending. Let's have a great week, guys. Let's have a great week. God bless you all.